Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepho Modiba and thanks for joining me. Tonight I'm joined by Tajudeen Ibrahim, Head of Research at ChapelHill Denham. Tajudeen, thanks for joining us. Tonight we are continuing our series of discussions around the various sectors in Nigeria. We're going to touch on the consumer sector. What is the state of the Nigerian consumer right now?
I think the major thing about the Nigerian consumer sector at the moment is that the sector is facing some challenges, particularly from the consumer spending standpoint. Consumer spending has been weak for close to like 2 to 3 years now, largely because of some macroeconomic headwinds. But despite that, we've seen some sort of improvement in revenue from food producers largely in the Nigerian consumer space. And in that context, I would say that consumer companies that produce foods and are also able to implement price increases have seen some sort of improvement in their revenue relative to consumer companies that are into the business of households and personal care products.
Sure.
And at the same time, one key feature about the entire market at the moment is that consumer companies that have significant exposure to foreign exchange have really suffered in terms of their ability to pay interest on their loans, largely because of the devaluation of the Nigerian naira. But if we take out the devaluation of the Nigerian naira, the core businesses of food producers in Nigeria have remained generally resilient, and the outlook is sort of strong, assuming that the overall macroeconomic picture begins to look better and brighter.
That's a great synopsis. You touch on, I guess, the various levels of performance depending on where you are. Would you say that actually the macroeconomic picture is looking a little bit more positive? What's the outlook from that front, and leading from that, are these businesses likely to do well?
I think the short-term outlook is still weak. If we speak to Q4 2016, for example, you would see that consumer demand is not increasing as much because the overall, or let me say the aggregate demand is still sort of soft. And looking into next year, maybe we could begin to see some improvement, assuming that, number one, the government is able to spend more to particularly spend on infrastructure, and also is able to spend more to pay salaries, and also probably, if possible, increase salaries for the government workers. And I think number four, in my view, is that assuming that FX problem is fixed, and then number five, want to assume also that the issues around the ability for many of government employees in the many states to pay salaries, all those issues are resolved. And number six for me is that petroleum product prices, speaking here particularly about premium motor spirit prices, remain constant, And number 7 for me,
Tajudeen,
let's
leave it there in terms of the big picture view. Let's jump straight into companies. Nigerian Breweries is one that you know quite well. Where are they in this environment operationally?
Well, if you have to go to sectors, I think in the current environment, I still like the brewing sector, and also I still like the sugar producers. And in this case, I like Nigerian Breweries, and I also like Dangote Sugar, specifically speaking in the sector.
Right. Nigerian Breweries, let's speak a little bit about the reasons you like them. What is the current operational performance of the business?
Well, to start with, for Nigerian Breweries, I think one key factor that makes me like Nigerian Breweries is the fact that they have a wide portfolio of products. So they are present in the premium segment of the market with strong products. They are present also in the mainstream segment of the market, very strong in there. And I also like their play also in the value segment of the market. They have strong products that represent them in this market. From a product standpoint, I like Nigerian Breweries. Secondly, I think Nigerian Breweries is trading currently at one of the prices at which investors can get to buy them as low as possible, because by the time they are able to resolve their FX problems, earnings will likely rebound on the back of that.
This diverse product range that you speak of, what does it mean for volumes and I guess leaning from volumes margins?
Yes, but in terms of growth, it's a good company. This is a company that has been able, to defend some good margins, and I think they have the ability also to pass price increases to consumers, and they've done this in a very strategic manner this year. So with that, and also combined with increased local sourcing of raw materials, they should be able, to report strong margins. The margins are good. I like them on that front as well.
So what you're saying is that the outlook from an earnings perspective actually looks quite good.
In terms of the volumes, we probably will see higher volumes as well, and we'll probably also see price increases, to mitigate the impact of raw material, input costs in their business. And to bear in mind also, absolute profits growth will also probably improve by the time their FX problem is resolved, and I think they are close to resolving that.
Sure. Okay, let's turn our attention to Dangote Sugar, the other company in the sector that you like. What are some of the things operationally that you like about this business?
The major thing I like about Dangote Sugar is the size of the business. This business controls more than 40% of the Nigerian sugar market. Secondly, they have the ability and capacity also to increase prices. And at this point in time, there is no effective substitute for sugar in the Nigerian market. So consumers, have always taken these price increases. And we've seen strong volume growth from Dangote Sugar. And we've also seen robust revenue, which is partly driven by price increase. In terms of the profit margins, the margins are looking good, and that largely speaks to their ability to pass price increase to consumers. And I think one thing to bear in mind for Dangote Sugar is that we'll probably see an increase in absolute earnings. They may give up on profit margins just to be sure that they grow sales volumes. And I think the major customers are going to still continue to buy them. Their major customers include Nigerian Breweries, Nestle, Cadbury, and other major industrial consumers. They continue to buy from Dangote Sugar, largely speaking.
And in terms of their competition, are they likely to see challenge in terms of their dominant market share position?
Well, I think in terms of the market share from a competition standpoint, there's not much that we expect because they have strong plans around expanding and also backward integration. We've seen competition from flour mills, which diversified its business into sugar production. But Dangote Sugar, as we speak, remain the leader in terms of installed capacity, and they are also leading in terms of backward integration. Within the next 5 years, we expect more of their sugars to be produced locally, and then they reduce the volume of sugar that they import from Brazil. That should support profit margins. And in the next 10 years, close to half or more of their sugar will be sourced locally. And that is part of their backward integration plan, which no other sugar producer in Nigeria is close to them in terms of the achievements they've made so far on backward integration. Even though flour mills is also going into that, they've not really achieved as much as Dangote Sugar.
Let's talk a little bit about the valuations. Are the valuations on this business still compelling?
The valuation, I think, are compelling, trading at sub 10 times PE ratio, and the EV to EBITDA is also low. And so if we consider our coverage of consumer sector, we have the PE and EV to EBITDA being around 23 times on average, and EV to EBITDA be around 12 to 13 times. And for Dangote Sugar, we have PE ratio of around 5, and EV to EBITDA somewhere below 10 times. So on valuation ground, Dangote Sugar is more compelling than the basket of consumer stocks that we cover. And the outlook is also promising.
Perfect. Let's leave it there. Thanks to my guest, Tajudeen Ibrahim, Head of Research at ChapelHill Denham. That's all from Buy Africa this week. Remember to follow me on Twitter. That's at Modiba_Tshepho. And send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team,